Hello, I'm Alan Mullane, Glenigan's Economics Director. Welcome to the third in our series of weekly video updates where we try to help you stay up to speed with how the coronavirus pandemic is impacting construction in the UK. Today we're going to take a closer look at the longer term development pipeline, which is a really good indicator of future activity. But first, I'll update you on projects on site which have continued to seize the headlines this week. Not only because work on sites is being suspended, but also because a number of contractors have been reopening their sites, all of which perhaps highlights the confusion in the market where COVID-19 is concerned, despite the government's efforts to clarify the situation. As of yesterday, the 2nd of April, 28% of projects currently on site were suspended, and these suspensions have mainly impacted larger sites. As a result of that, the value of suspended sites is £71 billion in total, accounting for 44% of the value of all work under construction. A greater proportion of private housing projects have been suspended than in any other sector, with work stopping on 42% of sites. This is because many house builders have had to address both the immediate safety and supply chain issues involved with keeping sites open, but also the potential slump in new house sales as prospective purchasers are unable to visit the site and view the homes. Regionally, in value terms, London has been the hardest hit, reflecting the greater predominance of high-value projects in the capital, with 52% of the value of work currently on site being suspended. However, as I mentioned, the good news is that many sites have reopened this week, after briefly being suspended, as companies like BAM, Kier, Waits and Mace have all completed review of their safe working practices. Alex Sharma, the Secretary of State for Industry, has also written to the industry, paying tribute to all of those who are working tirelessly within industry, including those working specifically on projects to tackle the virus. And perhaps even more importantly, he's emphasised that work can continue on sites. So accordingly, we may actually see work recommencing on more projects over the coming weeks. More good news is that the development pipeline also remains firm. Whilst projects on site are clearly important, the long-term prosperity of the industry is dependent on the realisation of proposed and planned projects that have yet to start. These account for the vast majority of projects on the Glenigan database, and to date, these projects have been little affected by the virus lockdown. In fact, there's been a steady flow of projects progressing through the planning and pre-construction process and going out to tender. Indeed, we've heard anecdotally that some contractors have actually seen a spike in invitations to tender over the last couple of weeks. My colleague Reese is now going to take a look at the development pipeline in more detail.
As Alan mentioned there, away from the headlines, there is still a very active construction market and the pipeline is remaining very busy. While we have seen a marginal 10 to 20% drop in planning applications for domestic extensions and home improvements over the last couple of weeks, large housing and commercial applications are pretty stable, which is indicating that commercial clients are, despite what's going on, continuing to prepare themselves for future development. There have been concerns in the industry that planning decisions may be delayed over the coming months due to planning committee meetings all being cancelled. However, our latest data is indicating that this has not yet had a real impact. In fact, March 2020 was actually one of the best months for planning approvals against any month in 2019. And when looking at seasonally adjusted data, March was only down 3% compared with February 2020. This is keeping in line with the general trend we have been seeing, and therefore suggests that COVID-19 is yet to have a real impact. Health and education detailed planning approvals both had very strong months compared with February, as did social housing, with the value of plans up 51% month on month. Regionally, we are seeing a north-south divide. London, the Midlands and the east of England are all down compared with the previous month when looking at seasonally adjusted data. On the other hand, the northern half of the UK is showing signs of clear, strong growth, with detailed planning approvals up 66% in the northwest and 28% in the northeast compared with February. Wales in particular saw very strong growth in planning approvals, seeing triple-figure growth against February 2020. Of course, many construction projects don't actually require planning, and we draw on a number of unique non-planning sources to identify these opportunities. And again, we haven't seen any fall in the number of projects coming through from these sources either. So despite the current concern and confusion, the good news is the long-term outlook for the construction industry remains very bright, and now is the ideal time to identify those projects in the earliest stages of development, all those businesses you want to get in touch with, and start those conversations now to deliver success for the future. Glenigan can help you do exactly that, so please get in touch if you'd like to find out more information. We're here to help. So stay safe, and we'll have another update for you next Friday. Thank you.